Welcome to lesson 2. Today we are talking all about candlesticks, so we're going to waste no time. We're going to jump straight onto the charts here, and candlesticks are literally the thing that you're going to be looking at your entire time trading. That's basically all that we trade is candlesticks. So what the heck are even candlesticks? How do we use them? How do we trade with them? It is very, very simple, and we're going to run through that right now. So as we can see, we actually start up here. So we have the different times as we learned last lesson, and we can basically change between the different charts. Now each chart is going to show candlesticks on it, but each candlestick is worth, so for instance we're on the 15-minute time frame right now, each candlestick, so let's take this one for example, is worth 15 minutes of price action. So within 15 minutes, this is how the candle moved, this is how price moved within that 15 minutes. The candlesticks are basically an indicator of price action. So it is the only true indicator of price is candlesticks. So I'll show a quick example of that right here. As we can see, these candles are all 15 minutes worth of price action. But if we switch over to the 30-minute chart, we will see that there is now less candles, and these are 30 minutes worth of price action. So basically the charts are fractal, which means every move up gets lower and is followed with moves up and down as we continue lower. So as you can see on the 5-minute chart here, we have a bunch of bullish candles and bearish candles moving up, but on the 30-minute, it is just solid bullish candles. That is what it means to be fractal. Don't worry about that. We don't really need to understand all that. That's too mathematical. Anyways, let's make it simple and let's go through some candlesticks. How do we actually read them? I am going to draw in my own candlesticks because that's what I'm going to do. Okay, so let's pretend this is the body of our candlestick, and then we can have the wicks as well. I'm actually spoiling what I'm doing as well, so we'll make these white just so it matches. Actually, I'll make these green. We'll make these green because this is going to represent a bullish candle, and then I'll make another one over here. Okay, so these are the basic two main candlesticks. You have a bullish candle and a bearish candle. How do we tell that one is bullish and one is bearish? Obviously, the first thing is the color. Yes, that is an identification that one is bullish, one is bearish. But apart from the color, how do we tell what is bullish and what is bearish? First of all, we're going to learn how to actually read the candles. So, starting with the body of the candle. The body is the thick part of the candle. As we can see, from the top to the bottom, that is the body. Those parts right there, I'll make these white as well, not to confuse you. That is our body of the candle. It is the fat part of the candle. It is where you would basically have the wax of a real candle. That is known as the body. And then these little areas up here are known as the wicks of the candle. So of course, you have a candle with the wax, and then you have a candle with the wick. So that's obviously why they are called candlesticks, because we have the body and the wicks. They also do look like candles. But how do we actually read these properly apart from just body and wick? There is 4 things in each and every candlestick. They are the high, the low, the open, and the close. So high, open, high, low, open, and close. Every single candlestick has these 4 things in them. How do we identify those? So starting with the bullish candle, our candle high is this point right here. The highest point of the wick, the highest point of the candle, that is the candle's high. Obviously, the candle low would then be the lowest point of the candlestick, of the candle wick, sorry. That is our candle low. Depending on if it is a bullish or bearish candle, we have the open at the low point for a bullish candle, and the close at the higher point of a bullish candle. Why is that? Because the candle open is where, say these are 5-minute candles, is where the 5-minute candle starts. That is where price is once that candle starts to print. It is called printing when the candle's like forming. When that candle starts to print, it is called the open. This is where price was when this 5-minute candle first started. This wick down for the low is where price could have moved after the open. So with this candle, we can see that price will open like this. It can move down here, which will of course make it a bearish candle at the start, but then turns directions, moves all the way up to the high and closes within here. So the body of the candle is where we have the open and the close, and the high and low is just where price moved within that time, but basically didn't close at that area, if that makes sense. Moving on to the bearish candle, we still have our high and low at the obviously top and bottom of the candles. So we can mark those out on the wicks like so. Drag this one down here, and that is our, that should say low. That is our low. But the only difference is for a bullish and a bearish candle, the bearish candle has its open at the top and it has the close at the bottom. That is what is the identifier for a bullish and bearish candle. A bearish candle opens high, closes low. A bullish candle opens low and closes high. Make sense? Hopefully it makes sense. You take a look at this, write this down, put it in your journal. But that is how we read a bullish and bearish candle. That is how we read any candle that is on our chart. So it is a price indicator within a certain time frame, whatever time frame it may be, 5 minute, 15, it doesn't matter. We read candles all the same, and it looks like this. You may have also heard of candlestick patterns. That is how some traders trade, depending on different candlesticks. There is two that I use, only two candlestick patterns that I use, and they're not really patterns, they're just singular candles. But I'll go over only those two. If you want to know about the other ones, you can go find another video that explains all of them. I'm not going to, because to be honest, they're not really that useful, and they're not really needed, at least for me, the way I trade. I'm not really trading them. So the two candles that I'm going to explain are bullish or bearish engulfing candles and doji candles. Those are the only two candles that I care about, the only two candles that I'm really worried about while I'm trading. If I zoom in here, we actually have a perfect example of both, so I'll show you both. So a bullish engulfing candle can be spotted with, let's use this one, it's very obvious, with this candle right here. This is what's known as a bullish engulfing candle. Why is it called that? Well, because as we can see, the candle over here has a high that moved to that point. A bullish engulfing candle closes above that candle's previous high. So where is the close? It is the top of the bullish candle. That is the close. Not the very top, that's the wick. Top of the body for the bullish candle is the candle close. That closing above the high makes this a bullish engulfing candle. Engulfing candle. Right? Because we closed above the previous candle's high, being that wick, we close above it. It doesn't matter if this candle is bullish or bearish either. So this candle is a bearish candle, right? And it had a high here. This next candle is also a bullish engulfing candle because it closes above the previous candle's high. So we are looking for closes above previous highs to identify bullish engulfing candles. That basically just shows that if it is a bullish engulfing candle, there is a lot of buying pressure in the market at that point, and price is likely to continue higher, or it is at least trending higher at that certain moment in time. We can move back over here and again show that the bearish engulfing candle is similar, but of course the opposite, heading the other way. We have the candle low here that got put in with this previous candle, and then the next candle closes below that low to give a bearish engulfing candle. So again, the low gets put in here, and then we have the next candle that closes below that low, bearish engulfing. We are still continuing a trend to the downside, at least at this moment in time, with a bearish engulfing candle. Yeah, makes sense? Good. There we go. So bullish and bearish engulfing candles basically just shows the buying pressure in the market. Who's on top, the bears or the bulls? That's of course why we call it bearish and bullish. But we'll be going over trading terms, I think, in the next lesson. So we have a bearish engulfing candle example here. The next one that I need to show you is the doji candles. So doji candles, the only really ones that I'm worried about. There is a bunch of different doji candles, and if you're trying to learn them all, it's just a bit confusing and they're not really needed, right? But a doji candle is this candle right here. It doesn't matter if it's bullish or bearish, that does not matter. But the main part that you want to focus on is, of course, the size of the wick. So as we can see, the size of this candle's wick is absolutely huge, right? As we can see, there is a massive wick on the bottom of this candle. So what does that tell us in terms of buying pressure, selling pressure? Obviously, as this candle was printing, it was a full solid body to the downside while it was printing. That would have showed bearish pressure, bearish selling pressure. And of course, as it's printing, it would have been below this low. And at that time, it would have been a bearish engulfing candle. But a candle is not a candle until it is fully closed. If it's a 5-minute candle, you have to wait that entire 5 minutes to confirm what the candle is. All right, it is not as it's moving, it's this, because it changes so many times. You have to wait for the candles to close to confirm what it is. But this candle right here is a doji candle because of the size of the rejection. So as we can see, if we measure up the entire candle, it is 17.2 pips. We'll be going over pips next lesson as well. The wick, the bottom wick, is 13.9 of those pips. So obviously a massive rejection from the downside, right? With these doji candles, they are basically showing that price did come down here, but it's weak. It is reversing. It is coming back against it. There was not strong enough pressure to continue going down, and the next candle could be likely to go higher. This one didn't go too high, but it did end up as a bullish candle. That is for that sort of an example. We can play price forward a little bit more as well, and there's another doji candle as well, I believe, somewhere here. Right here is also a example of a doji candle. We can see that we have a big wick above the body and a big wick below the body. This doji candle isn't really showing any decision in the market. It is an indecisive doji candle. So we have this one that should push price higher, and this one that shows that there's a bit of indecision in the market. Obviously, I don't just trade on these, which is why, as you can see, like this, you'd be like, oh, I can take longs here. Take a long, comes down. You know what I mean? Like, they're not fully, like, we can't just use them for entries. But if we play price forward a couple of candles, the next candle shows some buying pressure. The next candle then shows, as you can see, how it was bearish, but then rejected. This is a perfect example of a doji candle. What would we expect to happen next from this mark? We would expect for price, where did my arrow go, to potentially move higher after this point, because as we can see, some indecision, a doji to the downside, and then price moved higher. There we go. So it does work, definitely. It is not something that you can just take trades off. Like candles, the doji candles especially, are absolutely everywhere in the market. So you're going to be seeing heaps of them, but they can definitely be used to take trades off of. I sort of use them in my strategy. There'll be more on that when we're into the white rose tier of the course, but for now, we just need to know how to identify them, and the only couple of candles we care about are dojis and engulfing candles. So that's pretty much it for the candlesticks. Now the homework that I'm going to get you guys to do is for you to jump onto the charts, take a look at a bunch of different candlesticks, identify them, see if you can mark them up with the high, low, open, close, all of that stuff with both the bullish and bearish candles. Also, go see if you can identify 3 different bullish engulfing candles and 3 different bearish engulfing candles. Take note of them, take a picture of them, and basically just know that that's what that is. And then I also want you to find 5 examples of doji candles, and then just basically take note of what price did. So for example, we can take a look at this candle down here with this doji candle. Take a photo of this, take note what happened to price. It did take a little bit, but it did move higher after that. So take note of it. A wick to the downside shows that it is buying pressure. A wick to the upside, like here, shows that there is bearish selling pressure. So take a couple of notes of them, go and find some examples, go and play around on the charts and see if you can identify candlesticks.